there's a quick survey to fill out on ivmpodcast.com/survey. It lets us know a little bit more about who's listening to us. And you know what? We're going to do a few prizes. So, we'll do a random drawing of maybe 10 people and we'll send you all some swag. Remember, that's ivmpodcast.com/survey where you can fill out the survey.
Folks, all your banking woes are set to come to an end. The Jupiter Digital Banking app solves all your issues. Filling out lengthy forms to open an account is a thing of the past because on Jupiter Money, it takes all of 2 minutes to set your account up. KYC is super easy and smooth on the app, unlike other banking apps which scan and rescan your docs and then take days to update those details. It also has some very cool, very user-friendly features which lets you keep track of your spending and even manage savings. Just visit the Jupiter.money website to find out more or download the Jupiter app on Android and iOS to get started.
Folks, welcome to Paisa Paisa. I'm your host Anupam Gupta, B50 on Twitter. My God, this feels so freaked out. I'm in the studio at the IVM studio after 2 years and it feels just great to be here. It's a really special episode because it's great, really great to have women entrepreneurs in the house. And they have a really interesting product too. My guests, Anisha Dosa and Anusha Ramakrishnan, co-founders at Jiffy. Jiffy is building financial wellness for the employed workforce. We'll talk about what they have to offer right after this short break.
Remember the days when our granny used to narrate once upon a time stories? Let's bring back the good old days of moral stories with Storytime Tamil. Hi, I am Ravishankar Balachandran, host of Storytime Tamil podcast. I would like you to entertain and educate your children with stories from Storytime Tamil. Tune in to the new episode sharp at 7 p.m. every day on IVM website, IVM podcast app, YouTube channel or wherever you get your podcast from.
And welcome back. Let's do this in the studio. Anisha and Anusha, welcome to Paisa Paisa. Thank you so much for doing this. Phonetic names, what's the story?
Thank you for having us, Anupam.
Yeah, thank you.
Anisha, first you. Your background and how you all met and started Jiffy. Let's talk about that.
Sure. So, I'm a co-founder at Jiffy. I'm from Mumbai, spent most of my formative years in southern India, have a career largely spanning investment banking and private equity. And, most recently was a management consulting with Bain & Company. Seen the entire spectrum of financial services and then sort of narrowed in onto B2C and B2B tech. Saw a huge problem in the system with regard to wellness, especially focused on employee wellness for the underserved markets. And that's really what brought me to Jiffy. And I took the plunge just before the pandemic. So very excited to share our story here today.
And things change really quickly, huh?
They do.
Yeah? Anusha?
Yep. So my name is Anusha. I'm a co-founder at Jiffy as well. I'm a career banker, so have spent several years with Goldman Sachs, then the Royal Bank of Scotland, and finally with Citibank for over 7 years. And of course, I've seen the entire spectrum of financial services. When the pandemic hit, definitely got a lot of perspective in terms of what my passion was, decided to give it all up and chase it. That's where Anisha and I kind of came together and fleshed this. We think it's a brilliant idea. And so we're here to share our journey.
Yeah, look at that. Bain, Goldman Sachs. I'm just wondering, the serious heavyweight of names out there. Let's start about the concept, okay, because it's new. What exactly is earned wage access, the term, and what are the benefits, and is this popular in other markets? Is it for the first time that you're getting it in India?
Sure. So earned wage access is a product that looks to solve for short tenure liquidity requirements between one paycheck to the next. The idea is actually very similar and it's kind of akin to invoice financing, but for individuals. So we actually partner with corporates. We integrate with their payroll software such that an employee can access his salary as and when he earns it. So if he's worked for 5 days, he can remove 5 days of pay to cover a bill that's come due, to cover an emergency requirement, and so on and so forth. Here, the credit risk is not with the consumer, it's actually with the employer because our repayment is directly from the employer. So it's very, very secure form of financing. It is extremely reasonable and extremely effective, and it's on-the-go credit for the underserved employee base in India.
Let's break that down. Underserved, what do you mean by that? And I want to understand this as a problem for the person who doesn't have this but needs it.
So let me profile this, right, and then really come to what that segment looks right. So this is typically New Age India, Young India. typically don't have credit history or have poor credit history, still starting at the cusp of sort of their credit building foundation, right? They tend to have requirements which are driven on multiple fronts. One is they're either first-time entrants into the workforce, they're supporting a much larger household need. The second can be that they have financial obligations which don't meet their payment cycles. So they often delay those payments and then are further impacted into a debt trap, right? The third aspect is that a huge population in this segment don't actually have access to credit products, right? Whether it's credit cards, whether it's loan products, they don't have access to these at affordable rates. So if they need credit, it's usually at rates that are north of 3% per month. Our product gives them this access to their own earned income completely free of cost. So what you're saying is take your own money. It's not a loan. It's empowering to you not to have to wave your hand in front of anyone. Take it and take it for free.
Very interesting. So let me get this right. This is obviously not for the ITIM who's starting his very first job and who's got credit cards from the entire world.
That's
Who
right.
would not give that kind of a person a credit card? We are not talking about them.
That's right.
Let's get a better idea about what's your target audience
Yeah.
like.
Not
I'm asking this because I
Yeah.
hope that some of them are listening and
Yeah.
find the product useful.
Yeah.
So not to say that the IITIMs are not our target audience. Many of them would choose to take money in the bank account versus withdraw from a credit card at 3% and, invest that in the stock market if you may.
That's also true.
But they're not our target segment, right? Like you rightly said, our target segment is the grey collar workforce, typically earning anywhere between 2 to 8 lakhs per annum. Has monthly income that could potentially be closer in line with blue collar workforce, but whose education qualification, job profile is much more closer in white collar nature. So let me give you some examples, right? This can be someone working on the retail shop floor, a front desk receptionist, nursing staff, ward boys at hospitals, call center employees, and so on, right? Aspirational young India that falls into this grey collar workforce, right? So that's really who we personify as a target segment.
And right now, their access to credit or to a loan product would be practically non-existent.
So they would have access to credit, right? But it would be at a very, very high price. They have opportunities to check out with EMIs, again at exorbitant rates and so on. Short tenure liquidity requirements for any of the people in this segment comes at a significantly higher price than any of us would have here. Credit cards, on the other hand, there's credit card penetration in India itself is extremely low. You need to have a certain credit score to be qualified for a credit card. If you don't, you have to actually do a security deposit against the card. So again, credit card penetration within this segment is marginal.
Yeah.
It's a debit card economy here.
That is a tough one. And short-term credit is important, right? Because, for example, you could, God forbid, have a medical emergency.
Yeah.
Where would you go?
Yeah.
So I guess there is enough need for this kind of finance
Absolutely.
which doesn't exist right now.
Absolutely.
Or even if it does, you're talking of 2%, 3% per month, right?
More, yeah.
And so I'd like to just add one point there is that it's not that credit is not available to this segment. Very often what we find is that they're pushed into taking credit for a longer period of time than they actually need, right? Because many of the lenders out there today are interested in giving you loans for a slightly longer period of time only because that's what makes sense to them from a returns perspective versus the need is actually short term. So the idea is to try and come in there and really provide that short term need at a very affordable rate that satisfies the requirement of the user.
Very interesting. So I'm trying to understand this. Did you guys wake up in the morning and said, let's do this? Because, the entire world is jumping into lending. I get SMS spam like, your loan of 10 lakhs is approved. I'm like, dude, seriously, I don't need that. Where did this idea come to you?
So we actually started off thinking about, how can we target this particular segment from a savings and wealth building angle. And the idea was how can we curate products for this particular segment to build that discipline of savings, right? Because there are multiple products out there in the market, but this segment may not necessarily either have the appetite and in some cases the intelligence to consume some of these products, right? But when we went deep into our research and deep into our customer engagements, what we recognized was before solving wealth building for them and savings discipline for them, you need to plug the leakage that's happening at the point of access. If someone is losing 36% per annum because they're taking on shorter tenure credits that are that expensive, that's the problem that you need to address first. Build that trust with the user and then take them up the value chain. The second degree over there was that when you go to serve this segment and you say, okay, how can I give them credit, which is basically near zero cost, you realize that they don't have credit history, they don't have the credit foundation for you to be able to give that in a manner that will make sense. So the only route to do it and to make it affordable is to go via the employer. So the employer guarantees and does the collection mechanism for you. So you're protected and you're able to give them a product which you would typically give a much more credit-worthy customer.
Yeah, fantastic. Let's get on to that. the employers? What's there in it for the employers?
Absolutely. I would say in the last maybe 3 or 4 years, I think all employers have started to realize that their responsibility towards their employees lies far beyond just paying out salaries, right? So there has been an increased focus on various aspects of wellness, whether it's mental wellness, physical wellness. One important aspect is also financial wellness, which many employers are starting to wake up to now. But it's a very difficult thing to try and address, right? They don't know how to really plug that need. And another very interesting aspect that we've come to realize is that mental wellness itself is very much triggered by your financial wellness, right? And an employee's financial wellness, very often the financial stress is what makes them feel mentally, imbalanced at that point. So to that end, over the last few years, given the kind of change in the mindset of, CHROs of many of these organizations, they are trying to see how to fulfill that need. And that's where our product comes in and really helps plug the gap in a meaningful way. And so for a corporate, pretty much what you're telling them is that this is a free of cost offering for you. It's a free of risk offering for you. We take on the entire burden of trying to fulfill that need that your employees have. And we will be your partner through this entire journey, right? It's very important for us. We are not looking at corporates just giving us access to their employees. The idea is to do this in partnership with them to better understand what serves the need of their employees and how are we the best partners to really try and address what the employees are looking for, right? So from a corporate's perspective, most of the corporates that we've been interacting with are extremely receptive, and especially over the last 2 years, seeing the kind of calamity that people have really gone through, right? It's almost like a no-brainer for them that it's a great tool that I can just implement with a click of a button.
Yeah, you're right about that. Mental wellness and financial wellness are pretty much linked, and the last 2 years have shown that. My guess is that I don't know whether you have any specific anecdotes to share out here that can help our listeners to understand. But I'm guessing there might be some medical emergencies that push certain employees to the brink, and especially in the last 2 years, you've seen a lot of that happening. Is that similar to what you're talking about?
Absolutely, and another aspect related to that, right? Financial wellness is also something that employees tend to feel a lot of shame about. So we were speaking to one of the CHRs who said that, we had a manager who'd been working with us for about 10 years, strong record. He was going through a financial, calamity for about 3 to 4 months during the pandemic, but he never came to the employer. He never came to the CHRO, never put his hands up saying, I need some financial assistance. And about 6 months after the incident is when it came to light. And the CHRO felt so terrible that, that someone with a great reputation, great record with the company, having gone through a short period of financial stress, had he just had the comfort to be able to come up to the CHRO and say it, they would have been more than happy to help try and support them, right? But there's so much of a shame factor associated with anything to do with your personal finances that very often employees don't even come to know about it, right? And that's what has happened over the last 2 or 3 years, that there is this latent need for finance and financial assistance that never gets, it never comes to light simply because you don't want to go to your employer. You don't want to put your hand up saying, I'm the one facing some sort of, financial trouble at this point.
Yeah, I think what you're talking about is, if the HR or the promoters or the founders of any company actually want to retain talent, I'm guessing for them, having a good handle on the mental wellness of their employees and hopefully financial wellness of the employees makes a difference, right? Builds a culture.
Yeah.
Think that makes sense? What do you guys think about that?
Yeah, no, absolutely. I think what we've seen is the classic example, where we'd gone into multiple companies where they'd say that, look, you might see a maybe 2-3% uptake on the employee base, and what you're seeing in terms of the actual numbers, you're seeing closer to 40-50% and more, right?
Wow.
That's the amount of latent demand which doesn't come to the surface purely because there's a shame factor involved. You'll only go to your employer when you really feel like this is a reason that they will also agree is justified, right? And I think oftentimes we put our own biases onto our people, right? And we don't recognize that everyone has their own struggles, and this is one way to address it for them. And we've seen employees come to us and say, this product has really saved our life. We don't have to go borrow from our brother or our sister, and it's so shameful every month us not being able to, cover our expenses or provide for us child's emergency expenses and so on. So I do truly believe that this has definitely made employees that we've gone into organizations are very happy with their employer because they know it's an employer-backed initiative. It's not something that's completely independent.
So there you go, folks. If you are an employer, do you guys have a minimum size of an employee base? 10, 20, 50, 100 or anything? Do you guys have anything there?
So we typically look at companies which are, 500 to 1,000 plus, but we would offer it to, other smaller entities as well.
So there you go, folks. If, if any of you listeners out there are employing 500,000 employees and feel that there is an unresolved problem about your employees wanting short-term finance based on their loan, based on their salary. Sorry, you can just check out Jiffy. Did I get that right?
That's right.
Fantastic. And we'll get into the product and everything about it right on the other side of this break. Folks, don't go anywhere. We'll be right back.
Don't you think that if everyone around you is getting smart, you better be smarter? Hey there, I'm the traveling professor Siddharth Deshmukh and I'm back with season 2 of my podcast to make you smarter. Smarter with Sid. What's this season's focus about? Well, it's about 10-minute nuggets that will make you stand out at work. It's time to go from smart to smarter. Tune in every Tuesday and Thursday and become smarter with Sid.
And welcome back. Okay, guys, so I want to understand this. The financial journey of any employee, anyone for that matter, okay? Loan is just one small part of it. There's a lot of stuff about investments, financial security, retirement planning, blah, blah, blah. You've got someone who's 25. A great time to start planning for long-term finances. And I'm sure that you've also thought about it, because if you're going to be looking at just the lending part, there's so much on the product part. Tell me how you guys think about wellness as an entire concept for your product.
Yeah. So maybe I can start and Anusha can jump in. So the way we look at it is we will be a holistic financial wellness offering for the employed workforce. We think about this more in sort of 3 spectrums, one being access to credit, which we spoke about before the break. The second and the third piece is to do with spend and save, right? The idea is, can you actually equip and empower this employee to spend better and then effectively save better? Right. So we actually do have a spend product which allows the user to, of course, avail multiple benefits through that particular product. But more importantly, also allows that user to set budgets, track expenses against those in a manner that's also rewarding to that end user. The third piece, which is, of course, the savings piece, which is very, very close to our mission, which is to take every borrower and make them a saver, is how do I start that first step in the journey towards wealth building and saving for an audience that is typically intimidated by the products out there in the market today. Can I make products simple, basic, and easy to consume? Start with the discipline of savings, given I'm already on top of the data and the source of income, right? Because I'm integrated with the employer. Can I actually walk them through that first step in products that can give them lucrative returns, but are products that they understand and feel secured by, right? And that's really where the savings journey is very integral to our product and our offering. And I do believe as HRs as well, and as companies evaluate us and all the other financial wellness products out there, it's a very important thing for them to consider as well. Because just enticing credit is not going to help make that borrower become a saver and become more stable in the future, right? And that's really where we want to plug the gap.
And I would say that apart from just the transactional tools, right, we've tried to think about small pain points of users that we can try and address, right? Whether it comes to understanding what your credit score is, being able to see it with the click of a button, knowing what your provident fund balance is, right? Again, a big black box for many employees. We're constantly doing, your consumer surveys, trying to understand what are those simple pain points, which they're not transactional, right? They're not to encourage any sort of spend on the platform, but it's just, are there other small problems that you might encounter on a day-to-day basis that my app can just give you the information to make your life easier, right? So it's really trying to think through everything that can simplify personal finance for this particular segment that is very often confused or has no idea where to go.
Yeah. Enticing credit will not make a borrower into a saver. I want to put that somewhere. I want to actually put that somewhere, because you're living in this world of BNPL.
Yeah,
and people
absolutely.
just freaking out,
Yeah.
payday loans and stuff like that. And my salary is 25,000 and I'm buying a mobile phone for 25,000 just because there's a sale on that. I don't know. Maybe I'm old school. I don't believe in that.
Yeah.
But I just love that. Enticing credit is not going to make a borrower into a saver. You need to probably think about your savings, your, as you said, financial wellness over a long period of time.
Yeah.
Wonderful. Let's talk about the product. Okay. How does the solution work for employees, and, what do they get and how does the process work?
Okay.
Yeah. Okay. So, of course, the crux of the offering is that it's always done through the partnership with the corporate, right? Once we partner with the corporate, the app is available for everybody in the organization, right? So we want this product to be financially inclusive. We don't draw any distinction between one type of employee and another. Every employee can download the app. It's a very, very simple eKYC, 3-step eKYC process, post which they can start tracking how much salary they've earned for the month. At any point in time, if they want to access it, 2 clicks of a button and we fund the money to them and we recover the money directly from the corporate. They, of course, also have access to a card on the app. It's a virtual card, it's a physical card. It comes with a whole host of features, cashbacks, rewards, complete movement of money from the card to wherever you want the money to go. That's what we have today, and we're just building out the savings tools, which we will be launching in the next quarter or so, where we have micro savings, micro investment, other engagement tools as well.
The other side of the table, how does this work for employers? What do they? I mean, they get a dashboard and they get analytics and stuff like that?
Absolutely. So the idea is that, of course, given that this is done in partnership with the corporate, it's very important for the corporate to have complete transparency in terms of how their employees are really engaging with Jiffy, right? To give a more tangible feel for what the financial health of an organization looks like. So, of course, they get real-time metrics as to how their employees are really engaging with Jiffy, which are the products that they seem most interested in. They have complete controls at their end as well, so they can choose overnight to change the shape and form of the product for their employees the way they seem fit. So all of these controls are made available for a corporate as well.
How does the advance on next month's salary part, okay? I just want to spend some time understanding this in a more transparent way for the listeners, because I'm sure that you guys would have read there's a lot of social media, for the lack of a better word, outrage about how when some people look at the credit history at the credit bureau on a credit report, boom, they just find some unknown, loan that has been taken against them. So I just want to make this like very, very transparent for the people who are listening. How does the advance on next month's salary work? Is that a loan? A, will that mean that I am now within the credit bureau and therefore B, I will have a credit score? Just talk about this in a little bit of detail.
So basically, advance on next month's salary. So any of these products, whether it's earned wage access or whether it's an advance on your next month's salary, does have a credit element linked to it. What happens is that when the user makes that application, when they ask for an amount, we only do a soft pull, so it doesn't impact your credit score simply because you're taking it. But at default, if the employee decides to abscond, run away, and the corporate decides not to repay, to that end, it will impact their credit score. And that forms very much a part of our user education to the employees, that they need to understand that this money needs to be repaid. So you need to maintain the right kind of behavior to ensure that it doesn't negatively impact. But simply taking out the product itself or using or accessing your salary doesn't impact your credit score, right? Advance on next month's salary, again, it's a selective choice that an HR manager can choose to provide as an added benefit to their employees. It's not available across the board for everybody because, of course, there is a little bit more of a risk when someone is accessing salary that they've not earned. To that end, it's the discretion of the HR who they want it to be enabled for and for, what duration.
And just to understand the soft part and the default part a little bit well, so what does that mean? Maybe we can take an example of an employee, whose salary is maybe say 10,000 a month and he's worked for 6 months. So you could say that he's earned salary of 60,000 every month, and now in the 7th month he has a requirement of we'll say 5,000. Okay, so he needs access to 5,000 rupees as part of a loan. Okay, so how does your product work there?
So it's still within the range of his income, right? If his income is 10,000 and he's looking for 5,000, we can still give that to him without having to take any consumer credit risk. So his credit score doesn't matter to me because that's within his monthly income and the employer is repaying that. So for example, let's say he takes that money and he resigns the next day. I get notified because I'm sitting on top of the payroll stack, right? So to that end, I just simply take the repayment from the full and final settlement. And again, there's no, it not underwriting the user in this case, right? So credit score here is just it's just a soft pull or a check list item because a user is backed by this product is backed by the employer.
Okay, but that does mean that tomorrow when this person, let's say, goes out in the world and takes maybe a loan from an NBFC or someone, he would have a credit history then, even if it's a soft pull. Is that how it works?
Yeah.
And if he takes a credit card and then defaults, then that's going to mess up his credit score. But that's not on you, obviously. That's on his behavior.
Yeah.
Okay.
And we also don't, so you can have a credit score of 500 or 750. Doesn't matter to us. You'll still be eligible for the same access and the same product.
Okay. What about more than his monthly salary? He's looking for a 25,000 rupees loan versus a 10,000 rupees per month salary. Do you look at how many months he's been working, or on what factors would you advance him that loan?
Yeah.
If at all you'd maybe go for 25, you'd say, okay, I can't give you 25, I'll give you 15. How would that work?
So there's a couple of options that exist today. So one is, of course, you have access to your unearned, which is your next month's salary. So that gives you a little bit more than just your 30-day pay. again, within the guardrails of the fact that we can collect it back in your FNF should you quit, then take it and quit. The second option is we actually allow the user, let's say he's earning 25,000 in the month, it's day 20 and he's earned, 15 to 20,000. He can take that money and actually have a flexible repayment option. So he can split that over, 3 months or, however many months. If he does decide to, however, again resign, then it doesn't matter because it's still within the bounds. So I can collect it back, right? I can collect it directly back from the employer. So we give multiple flexible options. So at any given point in time, you can spread your requirement over a couple of months. With regard to multiple of income products, we have had corporates actually ask us that and ask us when we're introducing that. We've had users tell us we love the user experience. It's so easy when you're coming out with other loan products. I think that's where we think about that down the line. But today the idea is to keep it within the realm of us not having to be exposed to consumer credit risk, because the idea is let's plug short-term liquidity, let's build that user's credibility, let's help him build savings discipline, and then let's give him more if he needs it from a positive loan perspective.
Let's look at the hairy part, the tricky part, because we love to beat the system.
Yeah.
What if I just run away? What happens there? I mean, there is a whole... maybe if you can just share some stories, because you're about a year old?
Yes, we've not had any runaways. So
good.
I don't have a story for that, but I can tell you.
If any listener is planning to pull a fast one, let's just put some warning signs out there. What's it like? Tell me.
So we have guardrails in place, right? So every employer knows their employee base the best. If it's a BPO segment, if it's a facility management segment, they know absconding is of high risk, and they know what kind of guardrails will protect the book. And they're incentivized to make this a sustainable relationship, right? So to that end, they do set certain rules and limits and parameters in place. So for example, you can actually set rules that, okay, if someone's not completed 6 months in my organization, we don't give them access to any of the products. If they've completed maybe 12 months post, we give them access to 50%, 18 months post 100%. So different parameters, whether it's your tenure, whether it's your department, whether it's your grade, you can set certain rules and flexibilities that allow you to keep the book sustainable. In cases where people do abscond, the idea is that, the approach is to educate them about the impact on the credit score. And, given that smaller ticket items, how can we actually help you repay it in due course?
Interesting. Now, what if, can this be transferred from job to job? What if I'm leaving from an employer who has Jiffy to an employer who does not have Jiffy?
Yeah.
What if an employer just shuts down? What do I do?
Yeah.
So if you've taken an advance and you've taken that into your bank account, it doesn't matter because you've taken the money out, right? Similarly, if you've taken the money and taken onto the Jiffy card, that card is available to you even when you move from one employer to the next. The only thing that doesn't become available to you as you move from one place to the next is the earned wage access product, right? Which is the on-demand salary product. The savings tools, the spend cards, that's all linked to the user, and it has little to do from an employer standpoint. Again, of course, if the employee moves ship and they love the product and they want to see their new employer have it, they can go to their HR and tell them to contact Jiffy and we can provide it to them.
Yeah.
So, yeah.
An employer shuts down, same thing?
If the employer shuts down, then of course, we don't have the ability to offer anything to that employer anymore. And that goes much beyond our control, because the crux of this offering, of course, is that at least the earned wage access piece is very intrinsically involved with the corporate. Like Anisha mentioned, the card as well as the savings tools would still anyway be available to a user.
Okay. Let me understand how Jiffy works. Do you guys, what's your role out here? Are you just the tech? Are you just a platform? Do you hold any risk on your books? Do you have any underwriting tools? Do you have tie-ups with banks, NBFCs? Where is the money flowing? All of that. Let's just understand that.
Sure. So we are basically a tech enabler. We are partnered with licensed NBFCs and banks. They are the ones that provide the funds directly to the employee, and that's transparently made available at the time that the user signs on to the app, that there are these banks with whom we are partnered with, and you are consenting to their terms and conditions, right? So we are really a tech enabler for this. We don't carry any risk on our books. It's all entirely done by the bank to the user. We simply act as a facilitator for being the platform through which those requests come through from an employee, and we of course hold the relationship with the corporate and the corporate HR to aid the communication, recover the money at the end of the month, and all of that is entirely managed by us, but we are purely a tech enabler.
So basically, sorry, go on.
No, I was just going to say the user doesn't interact with anyone else except our app and Jiffy. So the user only knows Jiffy.
Yeah. But if things go south, will the bank's agents be knocking on the door and sending text to all his friends and family? He didn't pay back his loan or something. How does that work? Or you've not had that situation?
We've not had that.
We've not had that situation, but anyway, I think in light of what has happened in the last 2 years and the RBI's crackdown, I think most banks and NBFCs are anyway very, very scared of doing that. But at the end of it, their customer is not the ultimate user. We are the facilitator. So the onus is on us to figure out how and like Anisha said, it forms a large part of the user education, trying to understand from the user why they may not be able to pay back. Like we said, the biggest comfort is that we are not doing multiple of income, right? So you're not talking about someone running away with 4x or 5x of their salary. You're talking about someone who is maybe run away with 10,000, 5,000. So,
Future plans, because this sounds really interesting. I'm assuming that you've got investments lined up and all sorts of stuff. Tell us about that.
The future plan is that we really want to redefine how workforce financial wellness looks like, right? Whether that means, better access to your income on time, whether that means the best access to credit, whether it means, the savings tools that really help wealth building in its true sense. For this particular segment, we want to own that segment, right? And we want to be the leading player for financial wellness and look to redefine their entire workforce account to that extent. I think that's how we are looking at it. And we're building our product suite and our product roadmap in that direction. And that's a little bit about how we're thinking about the future.
And I think the way we would define success is if employees start going to employers and demanding that they need Jiffy and that they need Jiffy to be available to them, much like how employees today would demand insurance, that's when we know we've reached success. So that's what we're aiming for.
Lovely. Fantastic. I wish you guys all the best and come back to Paisa. Maybe once you have the investment products and you've got the wealth products rolled out and hopefully you have a much larger base also to speak about by then, do come back to Paisa. But folks, that is a wrap on this episode of Paisa. My guest, Anisha Dosa and Anusha Ramakrishnan, co-founders at Jiffy. Guys, thank you so much. Really, thank you so much for doing this for our listeners.
Thank you for having us.
Thank you.
Thank you. And listeners, thank you for listening to this episode. If you like this podcast, don't forget to check out other interesting podcasts on the IVM network. You can listen to us on the IVM Podcast app or ivmpodcast.com. You can also follow us on our social media. We are IVM Podcast on Twitter and Instagram. If you want to reach out to me, man, it's really weird coming back in the studio. If you want to reach out to me, I'm your host, Anupam Gupta, B50 on Twitter. And thank you so much, guys. Thank you so much for listening to Paisa.
No material on the show should be considered as financial advice. The material on the show is for informational purposes only. Please consult a financial advisor before taking any investment decision.
Hey everybody, it's been another great week on the IVM Podcast Network. On The Habit Coach, we've hit our 700th episode. That's 700. Public speaker and professional development guide Tonya Lyon speaks to Ashton about how mindfulness and stillness can be transformative. On Ek Chuski Finance, Priyanka has an interesting story which urges women to take charge of their personal finances. On Pulyabazi, Pranay and Saurav debate whether prohibition is an effective policy when it comes to curbing alcohol consumption. On Audio Gyan, Kedar speaks to Hemant Jha. He is the founder of Honest Structures and they discuss designing aesthetically enticing products. And on Marathi Khidkitun, the Deshmukhs introduce us to some lesser-known heroes that are working towards the betterment of society. Do follow us on social media. We're IVM Podcasts on Twitter, Facebook, Instagram, and LinkedIn. And remember, if you enjoyed this show or any of our other shows for that matter, do please tell a friend. Also, don't forget to rate us on any of the platforms you're listening to us on. You can check us out on YouTube as well. On ivmpodcast.com/YouTube, we have a list of all of our YouTube channels. Do check out if your favorite show is available as full video. We are also doing a small listener survey to better understand how you respond to our shows and advertising on the network. We'd really appreciate it if you could spare a few minutes to fill it out. It helps us build better shows for you. And finally, we'd like to thank our sponsors for this week, SBI Life Insurance, India Water Portal, and Jupiter, a digital banking app. Thank you so much for making this possible.